Hello, good afternoon, and welcome to HYCM's online trading workshop with myself, Giles Coughlin. This is one of the weekly workshops that we do with HYCM, and the idea of this workshop is literally that you develop some particular skills to trade in the financial markets that you can take with you on a day-to-day basis. Just as folks are coming in, just going to say hello. Let's just see who we've got coming in. Hi, Rami. Hi, Ram. Sammy, good to see you. Good to have you back, Aaron. John, Solomon Van. Oh, that's good. Good to see some of the regulars coming in. That's super. And a particular warm welcome if you are coming on the back of the Dubai conference that we did last week on the Palm. Very nice to have you here as well. So this you'll find this helpful as we're building on some of the teaching from the week away, and this will just show you how to put things into practice on a day-to-day basis. So welcome to you all. Just check that everyone can hear me. Oh yeah, hi Sammy, hi John, that's great, thanks. I'm obviously coming over loud and clear. Any problems with audio, just let me know on the question panel, but I think that's coming through good. Before we get going, and again, just a disclaimer, this is important because what we're doing here is education. This is all about giving you guys the tools to make your own trading decisions. What this isn't a trading signal service. Now, the reason that's so important is because market dynamics change, and what can be a great idea, on Monday morning can be a very bad idea by Monday afternoon, and even sooner in some cases. So the whole idea of this webinar is to give you the tools to see those market dynamic changes. Okay, that's what it's all about. That's where the most opportunity comes, is when we see a change in expectations. So this workshop is going to show you how to recognize those changes in expectations, how we go about identifying entries, exits, places to enter the markets, take advantage of these discrepancies. But it's not about signals, it's not about a solicitation to trade any particular pair at any given time. It's all about education. So I hope you guys understand that. Just want to make that clear from the outset. The session ahead, we are going to be looking at the handout, which I'll point out to you in a minute. In fact, if you go to your GoToWebinar control panel, you'll see under the handout section, there's a file which says Workshop Guide June 25th. If you click on that workshop guide, you will then have a document. I'll just minimize this a little bit. I'll show you the document. You'll have a document that looks like this. And we've got 5 different sections on this document to look back, look forward, look at the charts, look at your risk, and look at the outcome of your trade. And what I do is I look at these 5 different headings every time I come to trade. This is something that just happens intuitively for me now, but I put things down in a step-by-step format so that people who are learning how to trade for the first time can follow this process. And we're going to be literally doing exactly what it says here. We're looking back, looking forward, looking at the charts, looking at our risk, and looking at the outcome of your trade. And I've done a little change for this week that some of you regular guys will recognize. I'm just trying to think, how can I simplify this and make it even simpler for people to follow? Okay, that's what I'm trying to do. Yeah, that's right, John. It's at the end of the VIP. Yeah, exactly, John. Good point. This this sheet is on the end of the handout from Dubai, and this is kind of the takeaway sheet that I pointed people towards, and that's what we're going to be using here on Tuesday. So you can see how relevant that is, because that's what we're going to be using each week on a Tuesday. We just do the same thing over and over again to identify different opportunities. It's the same process, but obviously as the market's changing, it's different content. It'll make sense as we go through the handout. Okay, so the special topic today as well, this is just something a little bit different, sort of a market tip. It's how do you how you can use closing prices to stop breakouts from fake outs. Now, a breakout of a level is when a level's clearly broken out, okay? A fake out is when a level appears to be breaking out but ultimately doesn't. So I'm going to give you a little tip today to show, you know, when you're not sure whether something's going to break out or not, I'll give you a little tip to recognize a breakout. Now, it's a technical tip. It doesn't work every single time, obviously, but it is an important clue. And we're going to look at the gold chart to see that when we, you know, combine technicals and fundamentals, we can see how this is a really, really helpful tool for us to use. So watch out for that. That'll be at the end of the webinar today. The handout for session we now have. Don't forget, with these special topics, if you would like help in any particular area of trading, or there's a particular aspect of trading you're not sure on, please do email suggestions for any topics to myself here at giles.cochran@hycm.com, and I will look at any topics that are suggested, and I'm always open to new suggestions. So if that's something that you would like to take advantage of, just take a note of that email and you can send that to me later. So without further ado, let's turn to our handouts, and we'll start at the very beginning by looking backwards. Now, what I wanted to do today, and this is, you know, as well helpful for some of the total newbies who came over from Dubai. One of the key things here is looking back is how do you look back and identify recent sentiment? You know, how do you practically do that? So what I've done, so we're looking back here. We're trying to identify recent sentiment. Remember, sentiment is simply the mood of the market. Market moods last for different amounts of time. Sometimes a market mood lasts for, you know, a couple of hours. Sometimes a market mood can last for weeks or months. So we're trying to find recent moods of the market. And the reason, and the way we do that is by reading up on the last 2 sessions of market activity. Okay, so what we're trying to do here, apologies folks, what we're trying to do here is we're trying to identify what has been moving the market most recently. And as a general rule of thumb, if the newer and the fresher the news, the more likely it is to move the market. So if you have something repeated over and over again, eventually the market becomes tired of it. The market's looking for new and fresh news. So what I thought I'd do today is I'd look at free resources that you can use to work out sentiment by yourself. Now, it's very important that you have the tools to work out the sentiment, and it's even better if they're free. I know a lot of FX retail traders, they may not be trading with huge sums of money, so it doesn't make sense always to access paid resources. If a paid resource would work for you, I can recommend Rand Squawk. That's probably the most accessible and the most reasonable, and is used across the world and by large hedge funds, institutions. Just pop it here on the screen. It's called Rand Squawk, and they do a number of different services, starting I think as little as about $30 or $40 a month for their very light service. But you do get a number of reports. You get a squawk, which is literally someone speaking out the news as it comes in, and you can get a free trial with that. So if that's something that you'd be interested in looking at, you could always just use the free trial, and the free trial would obviously give you 1 week or a couple of weeks of access to a paid news service, and then you could see at the end of it if you wanted to take it up or not. Now, if you're not quite ready for that or don't fancy that, I'm going to go through some resources now that are totally and utterly free. Now, one of the sites I work on here is called forexlive.com. They've been around for a number of years, and there's a great bunch of people that I work with here at Forex Live. I just want to show you some of the free resources on here that are so helpful for FX traders. Now, what you're looking for on Forex Live is, I want to point out to you that what's called the session wraps. Now, when you open up the home page, if you go to trading session wraps, I'll give you a little tip. If you open this on Google Chrome and use an ad blocker, you don't get any of the advertising. So that's just a little tip for you. And some of the advertising can be irritating. So if you use Google Chrome ad blocker, you don't get any advertising. So you can see there's no advertising here at all. It's nice and clean. And if you're looking for the trading session wraps, click on trading session wraps. And remember, the FX day is split into 3 different sessions. And we can see the last 3 sessions here: the US, the Asian, and the European session. And it just goes through that sort of almost endless cycle. America, Asia, Europe. America, Asia, Europe. Those 3 sessions. And at the end of each session, they're distinct trading times. So what we're going to do is we're going to look at those. We're going to look at the last 2. Now, if you go on here, forexlive.com, just click on the Forex Live Asia FX News wrap. So what you get here, you will get a wrap. This is Eamon. He's a great guy, and he has detailed some of the most all the news points that's come out. Okay. Now, these news points are not all as relevant or as important as as each other. Okay, so there's a difference. Now, the guys try to be helpful. They do try to put some of them in bold or highlight it, or they talk about at the the key points during the wrap. Now, these obviously vary in length and detail depending on just day-to-day trading activity. But a very a good first place for you to come when you're thinking what's the recent sentiment would be to read one of these wraps. Have a look at the headlines, and if there's any headline that you think, oh, I want to see more, you can just click on it here. So okay, New Zealand trade balance, that was some New Zealand data. Okay, you can see that the New Zealand trade balance for May was high. The 12 months year-to-date trade balance, the exports were up, the imports were up. So you can see, okay, that's a relevant news point. You can see here that Eamon's speaking, New Zealand US dollar traded higher today. The only item of note from New Zealand was the trade data, although the RBNZ meet tomorrow and expectations are for a hold decision, not a cut. New Zealand US dollar was supported by some Australian dollar, New Zealand dollar selling. This was a factor weighing on Australian dollar, along with Australian dollar, Japanese yen sellers. So you see straight away, you're getting into some of the key movements. You can see that the New Zealand dollar was being bid. You can see that it was being bid on this trade balance data. And you can see that there is a rate expect decision tomorrow. So you see straight away, that's really helpful. Okay, really, really, yeah, thanks, John. So this is the beginning of what you want to do. So you can see coming into the European session, what you can see straight away is there is some New Zealand dollar strength in the market, and that's the reason why. We also had some, if you look at the previous US session, we saw some sanctions on the US. So we can see going into the overnight Asian session, we can see that we had New Zealand dollar strength, and we saw some Japanese yen strength. And some of that Japanese yen strength is on the Iranian deal here. Okay, Iranian foreign minister saying that the latest US sanction means closing channel of diplomacy forever. So that's a typically terse response from Iran in response to the US sanctions. And as we know, when the market is risk averse, we're going to see some yen strength. And you see the great thing about these wraps is, especially with Eamon, he gives little comments along. He's not just telling you what's happened, he's giving you some interpretation of that news. So it says here, look, okay, Iran's foreign minister tweeting that out. I guess that's just what he likes to have a joke. He's a funny guy. Anyway, forever's a long time. With any luck, there will be some thawing in relations between the 2 countries. Hard to see it, though, I'll admit. Tensions will continue to be a support for oil and yen. Okay, so you can see, as you're reading through the wrap, it does take some time to see what is important, what isn't important. But some of the most important aspects will be highlighted here. Okay, so looking at that, we can see New Zealand dollar strength, we can see Japanese yen strength. And remember, if you had to bet on two people that were going to win a fight, and you had to place a bet, I know it's a hypothetical situation, you'd always want to bet on the stronger person, wouldn't you? So if you could choose the strongest person you knew to fight against the weakest person you knew, you'd be quite sure that the strong person would win. That's exactly what we're trying to do when we're reading back through session wraps. We're trying to work out which is the strong currency, which is the weak currency, because we know in a fight, the strong is going to beat the weak. And that's all that we're trying to do from a day-to-day basis. Okay, that's the Forex Life wrap. Get exactly the same with the European wrap. So this is Justin. Justin finished his wrap. And again, you get some headlines here. He's trying to put just the most relevant headlines in. And we've got some more, he's got this New Zealand dollar leading the day. So that New Zealand dollar strength that came in overnight has continued through the first part of the European morning session. We again had mention of the yen holding firm, with US dollar, Japanese yen settling near the 107 handle after slipping to a low of 106.78. And we've got gold being a star performer, extending its break above 1,400, with geopolitical tensions and slight concerns about the US-China trade talks. It's helping to keep bullion bid alongside the narrative of easing global central banks. That was the big mover that pushed gold above that 1,350 level when I was over in Dubai. I was pointing that out. Hi Nadir, no worries, don't worry, no problem. So there's a whole mine of really useful information. Okay, so that is the forexlive.com trading session wrap. The beauty of it is totally free, so you don't need to spend anything, and you can see from the back end the way we put this information up on the screen is from a Reuters and a Bloomberg's feed. So this is just a slightly delayed Reuters and Bloomberg's feed that we have taken out. We're sort of filtering through the most relevant bits. Now, obviously, it's not as good as a Reuters Bloomberg feed, but we are filtering the key information out, and we are giving analysis as we go along. So particularly when you're starting, that's very helpful. And the guys are helpful. Justin in particular is very helpful in giving explanation and why currencies are moving the way they are. So do check that out. And Adam Button has a tremendous knowledge that he shares. And Adam doesn't share as much analysis, but when he does share analysis, it's very pithy and very actionable. So obviously that's not a recommended trade, but I'm just saying, each of the analysts has their own different style, and each of the styles you'll come to appreciate over time. So that is the session wrap sessions. Now I'll show you another one as well. Now another group that's good is Action Forex. Now you can see here they have a section here called Action Insight Market Overview. Okay, so if you go to Action Insight Market Overview, and if you click on that market overview, you can see here this was at the end of the Asian session, and it was 7:36 GMT, and you can see here that straight away you're getting a wrap of what happened. Yen and the gold surged today as global sentiments are weighed down by new US sanctions on Iran. Okay, helpful information. We know why yen strength, we know the reason. In particular, gold hit as high as 1,439 and is currently up more than 1%. Nevertheless, New Zealand dollar outshines yen and is currently the strongest one for today. Kiwi is boosted by record exports in May, which solidify the case for RBNZ to stand pat tomorrow. Sterling is the strongest for now, helped by pullback in euro pound. Okay, we also got the markets down, Nikkei down 0.52%. Now, as we talked about in Dubai conference, the Nikkei and the yen are very closely correlated. So when the Nikkei is down, the Japanese yen is up. They work opposite to each other. A weak Nikkei generally means a strong yen, and that's exactly what we see today. You see here, they give some really good information. You've got Trump put sanctions on Iran. That's the reason for the yen strength. We've got the Chinese US trade deal that's trying to be worked out at the moment over the G20. We've got some Bank of Japan April minutes, not that useful for today, but good for background reading. And again, when you read the minutes, you've got the link to the minutes here, you will get a really good insight on what global banks are looking at. So I'd always recommend reading central bank minutes. They will give you a really fast education on, what are the key aspects a central bank is looking on. Then we've got this detail about the New Zealand exports, and then we've got some technical outlooks on the US dollar Japanese yen pair. Okay, so you can just see how helpful these wraps are. You can find them all over the place. Here's another one I saw for this morning, and you got lots of different wraps you can see. These are two that you will do well to start from, and to be honest, you're not going to need much more than two. But I wouldn't stick to one wrap, because it's always helpful just to cross-check cross-check the information, and you want to make sure that you're getting some kind of clarification. So I would never recommend reading one analyst. You want to read a number of different analysts, just in case someone misses something. It's possible, and the more you read, the less likely that is to happen. So that is all part of this skill in looking back. Now, for those of you who regularly come here, you'll see that I've done that differently this time, because I wanted to show you guys how to do it for yourself. Oftentimes I'll just go through the information and then we'll work it out together. But today I really wanted to make sure that you could see that how to do it yourself, and that's the way to look back. Use the sentiment, and by using the sentiment, you start to get the lead that you need, okay, for identifying the strong and the weak currencies. So let me just see that. Yeah, okay. So we'll go back to our sheet. So we can see we've identified recent sentiment by reading up on the last two sessions of market activity. Identify the key market sentiment. So we've started to do that. So we see the key market sentiment is we've got Japanese yen strength on new US and Iran sanctions. We've got New Zealand dollar strength on better than expected trade balance data. We've also got US dollar weakness, as the US dollar is still being sold on the back of the dovish Federal Reserve from last week. So we can see a weak currency is US dollar, strong currency is New Zealand dollar and Japanese yen. So we have our weak currency, we have our strong currency. Now, can you summarize that sentiment in a sentence or two? That part is just that slight pause. What I tend to do is, as I'm going through the last data session, is I'll just jot down, a strong currency, weak currency, just put it down on a piece of paper. Strong, yen, New Zealand dollar, weak, okay, US dollar. And then that's very helpful for when you want to look at putting your currency pairs together. Now, this is important. Once you've done that, you might be tempted to jump to point 3, look at the charts. And in a sense, that would seem most logical, wouldn't it? Okay, well, I want to identify the sentiment, I want to summarize that sentiment, I want to find out the strong and the weak currencies, and then I want to start looking at the charts. But there's a key element I put in the way. This is a pause, because this pause is very, very important, because you have to look for key upcoming market events. Because if you enter before a key market event, you are entering a position on information that's about to change. So on a very, very simple note, let's look at our, the current situation we're in. We've got some stronger New Zealand dollar for the last session. Going into this session, we're getting a stronger New Zealand dollar. And the question is would we want to enter a New Zealand dollar trade knowing that in about 10 hours time, the Reserve Bank of New Zealand are going to be making a rate decision? Do we want to do that? Absolutely not, because once the RBNZ make a rate decision, we know that the New Zealand dollar is going to find a fresh direction out of that rate decision. Now, if we just entered on the basis of the trade data, we are entering without recognizing what's coming up, okay? Now, there's obviously a finer point in this because some data, Sammy will get to gold later. Now, the key thing for this is you know, not all data is important as others. So we know there's a hierarchy of what's important. It's important what the central bank are focusing on, and it's important what the general trend is. So we have to hold multiple factors in our minds when we're looking at how long could we hold a potential trade. It does depend on the different situations. So let's now look forward, and I'll show you how to do this, okay? So I've showed you how to look back, and now I'm going to show you how to look forward. Okay, first, looking into the next session, there is a number of US Federal Reserve speakers. We've got Bostic and Powell. Now, the big one here is Powell. Okay, Jerome Powell is speaking today at 5 o'clock GMT time. Now, key thing to remember, whenever you get a central bank who making a decision, the central bank governor will be closely eyed after the event to see if the central bank governor reinforces, supports, or contradicts the message from the statement. So in this last instance, the market has priced in now, after last week's FOMC rate meeting, has now priced in 100% chance of a rate cut in July, and there's a chance of a greater rate cut than was previously expected in July. So when Jerome Powell speaks today, he is speaking on outlook and monetary policy. So in other words, it's a very relevant topic to be speaking on, particularly relevant to what the Federal Reserve has recently mentioned about their rate cuts. So this will be closely viewed. His text will be printed out and available at 5 o'clock GMT, and you can see that on the Forex Live website. That will be reported on live, forexlive.com, and we'll report on that. But that has potential to move the US dollar. Because what the market's trying to think is are we on the right lines? We've sold the US dollar off quite heavily. Are we thinking on the right lines? And then Powell speaking, he has opportunity to address that. He might say, well, the market has sold off, US dollars too heavily, or, although a rate cut is possible, we're not definitely promising it. Anything that sounds a little bit more optimistic has a potential to see the US dollar reversing with some strength. Okay, so we're looking forward. So although we know we've got US dollar weakness in the market at the moment, we need to be aware of these kind of risk events where the sentiment could change, albeit for just a short period of time. So that's something to be aware of. And they're the other Fed speakers speaking at the time as well. We now want to look forward onto our calendar. So let's have a look at the calendar. I will. Here is again, this is a free calendar. It's called Forex Factory. And if you go to forexfactory.com, you can see a calendar of key market events. Now, it doesn't have every market event, like you're not getting all of them, but you're getting a lot of them. So you've got Jerome Powell speaking here. It's on this chart, which is helpful information to know. And what you're looking ahead. So here we are. Let's just refresh the page. Right, okay, so here we are. The next event is going to be 3 p.m. GMT time. And we're looking at the Canadian dollar wholesale data out was better than was expected. We got FOMC member Williams speaking. We've got UK minor data points, but that's obviously a good beat for the Canadian dollar. And we've got consumer confidence coming out, a larger data point out for the US, Jerome Powell speaking at 5. So these are the key events. Now, looking a little bit further ahead, I've just put it here. We have the Reserve Bank of New Zealand rate statement and cash rates. Now, this is a very key event, and we're likely to see some volatility in the New Zealand dollar and potentially some very good opportunity. Now, what we have to remember is the context of the market. Now, the context of the market is that the Federal Reserve has indicated it's going to start cutting rates. Now, obviously, we've seen some New Zealand dollar strength against the US dollar because all of a sudden, if one central bank is cutting rates, it's going to start to lose value. So relative to the New Zealand dollar has appreciated in value. Now, if the New Zealand dollar appreciates against the US dollar too much, it's going to make a strong New Zealand dollar, which is going to make it more difficult for the New Zealand economy. So going into the rate meeting tonight, we know that a strong New Zealand dollar is not going to be helpful for the RBNZ. So they don't want a strong New Zealand dollar. Now, what do? Do they keep rates on hold, or do they cut rates early? There's definitely a potential that the RBNZ will cut rates. Now, you can see here, there's two different figures. This figure on the right-hand side is the previous data. This figure on the middle is the expected data. And these figures on the left-hand side are the actual data. So it goes prior, expected, actual. Prior, expected, actual. Now this is key because this tells us that the expected is 1.50%. The prior rate was 1.50%. So any deviation from that 1.50% is going to result in some strong New Zealand dollar reaction. If it's a rate cut, we're going to see New Zealand dollar lose value. If it's a rate hike, which it almost certainly won't be, it will be 1.75%, and it will see some New Zealand dollar buying. So we can see any New Zealand dollar position is going to be very vulnerable to this. And remember, we've got the cash rate and we've got the rate statement. So what traders are looking at, they're looking at what's the next decision. So even if the cash rate is the same, traders then look at the rate statement to see, well, okay, do the RBNZ say, yeah, we're going to keep rates on hold now, but we're definitely going to be cutting later. We anticipate cutting in the next meeting. Then you're going to start to see the New Zealand dollar sold off for exactly the same reason. Okay, so that's a key. We look forward. Key event, key opportunity. Because if the New Zealand dollar is a cut, that becomes a high conviction trade and it becomes an instant sell. Because if the RBNZ cut interest rates, you know the New Zealand dollar is going to fall heavily and quickly, and there's an opportunity to make some quick money on that spike down. Now, we also have on the Thursday business confidence data out for the New Zealand dollar. So the rate statement will be read in light of the business confidence data as well. So if they said something like, well, you know, we're going to keep things on hold, we don't think things are too bad as long as business confidence stays up, then all of a sudden something like the business confidence data will become very important. That has been low recently. We've had some very low readings. Businesses are very lacking confidence in New Zealand. So that's being viewed quite carefully to see how confidence is amongst New Zealand businesses. Then we also have on the Thursday some CPI data out of Germany and Spain. That's going to be interesting. Eurozone inflation has been poor. The weaker Eurozone inflation, the more likely the ECB is going to cut rates. So weaker inflation is going to weigh on the euro. And on Friday, we see ahead some key data for the US dollar. And this is the PCE price index. Now, this is inflation data out for the US. So the core reading is the Federal Reserve's, preferred reading. So with inflation, this is the one they really like. They want to look at the core. What's the core inflation like? If inflation is lower, then it's going to be more likely that the rate cut's coming, than potentially an even higher rate cut. Obviously, if that's higher, that's going to be supportive for the US dollar as traders think, well, there's less likely you're going to get 2 rate cuts in July, and maybe this will be less likely that we'll even get 1. So inflation will be viewed carefully, and there'll be a a reaction from any deviation on that. You know, any deviation plus 0.2%, 0.3%. You're going to see a strong reaction to that. Also, we have the G20 meetings going on. Again, that's very important because whether President Trump and President Xi make a deal is going to be very key for risk assets over the course of this week. Right, so we've looked forward so we can see some of the key events, okay? Now, one thing to realize is that just because there's some deep data coming out from New Zealand later, doesn't mean you can't trade the New Zealand dollar now. It just means you have to be aware of it. And you have to be aware of, you know, the closer you get to these bigger meetings, the less volatility you get in the currency, because obviously people know, oh, okay, there's about to be a big meeting, a big decision. So people aren't initiating new positions. So European session, so we've just seen the European session close. We saw the currencies are quite subdued. Euro, US dollar is just minus 0.17%. US dollar, Japanese yen plus 0.2% when I took this screenshot. Pound, US dollar down fractionally 0.13%. There was there was some key data out of the for the pound, with Boris Johnson saying that, you know, we're definitely going to be Britain's definitely going to be leaving the European Union come 31st of October. So there was some negative sentiment in the pound, although a lot of that negative sentiment is being priced in now already, and so it's kind of old news. But that was a little bit of fresher news, and that hasn't been said as strongly as that, as the fact Boris Johnson said it today, and Boris Johnson is going to be the new Prime Minister as things stand at the moment for the UK. Is a possibility that Jeremy Hunt picks him at the post. Stranger things have happened, but this is going to come down to 23rd of July, when the final decision will be made and a new UK Prime Minister will be chosen from the Conservative Party. So we haven't got long, just under a month, and that new PM will be decided. US dollar, Swiss franc, we saw here dollars down 0.54%. US dollar CAD was pretty much flat on the day. Aussie US dollar flat on the day. New Zealand US dollar up 0.29%, just reflecting a little bit of that bullish sentiment from the trade data overnight. Now we have a quick look at the different markets. We want to see, Sammy, yeah, that's right, Sammy. Higher inflation leads to interest rate hikes. When inflation starts increasing, the only tool that central banks have to control inflation is interest rates. So if inflation starts to increase, the only option, you know, once it's hitting the target level or above the target level, the only option the central bank has is to raise interest rates. So that's why inflation is such a key indicator. When inflation is increasing, it means that a central bank needs to increase interest rates to control inflation. You know, a central bank wants to have stability for their country. They don't want inflation going, you know, 4, 5, 6, 7, 8, 9, 10%. We've all seen those horror stories, and, you know, the Second World War, when there was hyperinflation and people needed, you know, wheelbarrows full of notes just to go and buy a loaf of bread. No, the central bank wants to keep currency stable. So once inflation starts increasing, interest rate hikes are coming. And obviously, if inflation is stagnant or deflated, then there's no need for interest rate hikes. So that's the connection. That's the way it works, Sammy. As I said, do ask questions as you go through. Don't be afraid to. It's very helpful. So here we go. Text. Sorry, I'll get rid of that. This is the intermarket analysis. Okay, so we saw these are the different indices that we've got. Now, remember, when it's plus 1%, that's when it's significant. Okay, so the Nikkei was down 0.43% at the close. Hang Seng down 1.15%. The Shanghai is down 0.87%. So Asian indices were down. That reflects that risk aversion that we saw, and that was from the US around sanctions, and we saw some Japanese yen strength. So we got our stronger currency for the day. Certainly for the morning session, the Japanese yen. We also look at yields, and we can see that US 10-year yields, 30 and 5-year yields are all down, 1.19, 0.35, 0.37%. All the yields are down. S&P 500 futures were down 0.14%, and Dow futures down 0.9%. So this is obviously going into the American session. So the US futures were down, Asian indices were down. We can see that the UK and European shares are down, FTSE 100 down, Euro stocks, the DAX flat, the Spanish IBEX, the Italian FTSE, the Portuguese 20, and the Athens composite. All of those are down or flat. So, you know, negative sentiment. So you can see the VIX is a little bit higher today, but this is basically, you know, a little cheat sheet for us. You know, if you get higher VIX, so higher volatility index, we've got stocks falling. So what we're seeing, we've got commodities falling, we've got bond prices rising, bond yields falling. That's a risk-off environment. So at the moment, we're in a clear risk-off environment. Okay, so that is the situation we're in. Now, this is helpful, this little cheat sheet, because it just gives you a quick summary of everything that's going on. Now, the opposite, if you had a lower volatility index, if you had stocks rallying, commodities rising, if you have bond yields rising, then it's risk on. And don't forget the characteristics that we see. In a risk on market, what we're expecting is higher yielding currencies like Australian dollar, New Zealand dollar, and Canadian dollar to appreciate. So generally, risk on market, we see Australian dollar, New Zealand dollar, Canadian dollar appreciate. The yen and the Swiss franc are sold off. Now, the risk-off markets that depreciate fall in value during risk-off times. Yen and Swiss franc appreciate. The Australian dollar, New Zealand dollar, and Canadian dollar depreciate, and the Nikkei falls. Okay, so that is the general pattern in the risk-off market. Now we can see we're in that risk-off market at the moment. The only exception is we're seeing some, like New Zealand dollar is appreciating, and we're seeing some Australian dollar appreciation and CAD appreciation, because there's a bigger story that's taking over, and that is a dovish Federal Reserve. So we can see against the US dollar, we've got the CAD, New Zealand dollar, and the Australian dollar are appreciating. Okay, so we are in a risk-off market, but we have to keep this in this current context, and the context is in a dovish Federal Reserve. So just keep that in mind. So looking at the charts, now we want to start looking at the charts. Okay, which currencies are our weak currencies, which are our strong currencies, and what other markets are showing some strength at the moment? So this is over to you guys in your comment section. From the things I've been mentioning, been looking back, we've been talking about weak, strong. Which currencies do we have that are weak? Which currencies that are strong? And which other markets are we seeing some movement in? So I'll just give you a moment, guys, here to mark that down. Yeah, that's it. Okay, Aaron, John, spot on. Well done, you guys. So what we're seeing is some US dollar weakness, okay? And the strong currencies, that's right. Well done, Aaron. We're seeing Japanese yen and New Zealand dollar. Okay, so straight away, we now see, yeah, and we've got some, yeah, that's it. We've got Asian indices down. I'll just do it here. That's right. Asian indices down. And another risk market is gold, and we've got gold up at the moment. Now, the thing to remember about gold is that gold doesn't have a yield. Okay, so you know, if you have a share of a company, you get a yield. If you buy a bond, you get a coupon, which is essentially a yield on your investment. Gold doesn't have a yield. So gold only really becomes alluring when everything else is riskier. Now, with the Federal Reserve looking at cutting interest rates, and interest rates looking at going down across the whole world, risk is elevated. US-China trade war, yields are going down. So you can see, looking across the world, that gold suddenly becomes more attractive. It's a safe haven commodity. So gold has been very attractive at the moment. So there we go. We got it. So here's our weak currency. Well done, guys. Well done, Aaron and John. Weak currency, you've got US dollar on the dovish Fed. Strong currency, we've got New Zealand dollar on exports jump to record high, trade surplus. Japanese yen on fresh US-Iran sanctions. Strong commodities, we've got gold on dovish Fed and fresh Iran sanctions. So these are our weak currencies, these are our strong currencies, and these are our reasons. So now we have our currency pairs to trade and our reasons for trading them. And we have a US dollar Japanese yen short and a New Zealand US dollar pair long. I had orders to enter on both of these pairs today. So what I'm sharing with you is exactly the process through which I go about trading when I'm looking to trade intraday. I use exactly this method, precisely this method, okay? So we've now done that. So now we have our pairs to trade. Now that's an important part of trading. We've managed to narrow things down. We've got our short and we've got a long. We've got two potential pairs. So now we get to the next part. We look at the charts. Okay, we've developed our bias. We have to ask, how does the sentiment marry the fundamental outlook of a currency? We've started to do that with the New Zealand dollar. We can see that there's a New Zealand dollar strength in the market now, but we know that there's a big question mark whether that's going to last or not, because it's going to depend on what the RBNZ say later on today. Now, let's have a quick look at some technical levels to enter. So I'm now going to just call up a trade view chart, and we'll start looking at how we go about doing that. So I'm going to go through the same method I went through in Dubai, and it's exactly the same method that I use. Okay, so we've got our chart. I just use TradingView. It's nice and attractive. It's a nice trading software. Okay, I hope I can do this with the ad blocker. Right, so here we go. I'm here on the US dollar Japanese yen pair. So I'm looking now at trading this. When I'm trading the intraday charts, I use a 15-minute chart. And I want to mark in, so we want to go from yesterday's high, the 24th high was here, and today's low is here. So I'm going to put a Fibonacci retracement level fib. So I go from yesterday's high to today's low. That is my kind of trading zone for today. And now I'm looking at obvious places to trade. Now looking here, I'm looking for multiple levels of confluence. So a key line I've got here is the 50% and the 61.8 level. That's a very good place to go short here along the 61.8 level, and this 50% level. So 107.15, 107.24 are very good places to short. I will also add some pivot points on. So go to pivot built-in, go to pivot point standard. We'll put them in here. Makes the chart a little bit more ugly, but we can see here, look, key places to short from. You have the support level here, just underneath that 61.8 level. So basically a good short region is anywhere from 107.14 up to 107.28. Okay, so I was looking to enter at 107.2324, and my entry was just missed earlier today. This trade is still valid. Obviously, we'll look at the risks to it in a minute. So that trade may or may not be valid depending on what happens with Jerome Powell, but we'll talk about that in a minute. But we can see here, that is the sort of places to enter. Now, where would you want to put your stops? See, you want to put your stop nicely out of the way, okay? So you can see somewhere above this R1 level, or maybe even this R2 level, completely out of the way here. So you can know that, if your stops are hit, you're totally wrong. If your stops, something is very wrong with your analysis. There should be some selling pressure because you've got a strong currency against a weak currency. You've got US dollar, Japanese yen. So any returns to these resistant levels should be sold. Now, this takes a bit of getting used to, because at first you think, well, hang on, this isn't so good for my risk reward. But your risk reward is being worked out in a different way. It's been worked out through the fundamentals, and your fundamental analysis will result in a weak and a strong currency going against one another. So your analysis is being done in a totally different way. And if price does even get up to this, this pivot point here, that's potentially another opportunity to sell. So for me, if I was in this trade and I got in at 1725 and then price went up to 107.40, I would probably enter another position knowing that that's a really good value, as long as some condition hasn't changed, and that's a really good value place to enter. And I'll be looking at taking profit down at these lows, 106.88. Okay, so that here is that the wrong level is 107.60. You've got it anchored above the previous day's stops. Let's get rid of that traditional pivot point, and you can see here, that level there will be a very sensible place to have your stop. Now, you don't leave your stop up there. As the trade goes in your favor, you can bring your stop down. Okay, so say you got triggered in the entrance and then price starts moving down to the side, you can see, okay, well, I'll bring my stop below this swing point and then below that swing point, and you can even trail your stop on the way down. But I would recommend taking profit unless there's good reasons to hold the trade. So that's the way that I would handle the trade. That's the way I'd enter the trade. That's where I'd exit it. That's where I put my stops. Put it nice and out the way. So if you start messing around and trying to put a really tight stop here, I'll enter at 382 and I'll put a tight stop above the 50. You're going to find yourself getting stopped out. You could do that. You could say, well, I'm going to enter at the 61.8 and I'm going to put a tight stop on, maybe a 10-point stop. You can do that. And obviously, if you get stopped out, you can always re-enter. So that is another way of doing it. The problem with entering and exit too many times is you'll fiddle around with your trade too much, and it becomes hard to manage. So just having a simple process makes it easier on a day-to-day basis. Okay, so that's one example. Now, I also want to show you a little tip, and I will come to gold as well now, Sammy, as well. We're going to look at gold. And this is a tip of how to recognize a breakout from a fake out. Okay, now this was a really satisfying trade to look at. Let's have a look. Okay, let's try and get this line a bit bigger. Yeah, okay, and let's give it a different color. Okay, makes it obvious. Okay, so right. Here we were, it was the 1350 level was the key level. Now, there was a one stage, 1350 level, when price looked like it was breaking out of this level. Okay, now I think there was some weak US retail sales. No, there was some strong US data that came out. I think it was stronger US retail sales that suddenly made the market think, well, hang on, actually, if there is a bit of recovery in the US, then maybe the Fed won't be dovish. And so price broke through. Now, I looked at this on Dubai and I said, look, this is the sort of trade I love seeing, because when I learned to trade, first of all, I learned from a purely technical basis, and it's a nightmare trying to trade the markets from a purely technical basis, because you don't know why the market's moving. You can just see it's moving, but you don't know why. Sometimes you make a good trade, sometimes you don't. It became very unpredictable. And the thing that used to annoy me as a technical trader is, although I was profitable, I didn't know why I was profitable. And that may be hard to understand, but the insecurity of not knowing why I was right or why I was wrong is what ultimately led me to understand fundamental analysis. All of a sudden it made sense. This is a perfect case study. See, now from a technical perspective, we've got a double top here. 1, 2, it's double top. We then have a pin bar that is a false break of a key level, okay? We then have a bearish close on that pin bar that closes within the body of the previous candlestick. So from a purely technical perspective, that is a legitimate pin bar that is a double top, rejecting a level. It's up high, it's away from price, there's space to the left-hand side. It's pretty good. The only thing you'd want to see technically for it to be a bit better is a little bit longer and the close going down a little bit lower. That would have made it really attractive, okay? As it was very good, but I was never going to trade this because, as I was mentioning in Dubai, and this is not me blowing my own trumpet, it's just me saying what a great learning point for us, and I pointed it out at the time live in Dubai, is that, you know, what we're going to decide this was the Federal Reserve. So if the Federal Reserve was dovish, we're going to see US dollar selling and gold was going to break out. If the Federal Reserve was not dovish or was more continued being on patient wait and see, you know, on the data, we're going to see gold fall. Okay, so all of a sudden you could tell what the catalyst here is not price. That's not the catalyst. What the catalyst here is the fundamental news. Okay, so very clearly, Federal Reserve, 19th of June, 20th of June, bang, price hit and broke out on a dovish Federal Reserve. They were more dovish than the market was expecting, and it took the market by surprise, and we saw gold break out. So how do we know a fake out from a breakout? Well, here's the clue. Okay, this is how you see. When you see a price break a level but not close above it, that's a good clue that the level is not broken. Okay, what you want to see a break of a level and a close above it. So let me show you. Here's the level. It's 1350. Okay, 1350 is that level. Okay, we've got a test, rejection, test, rejection, test, rejection. Then we've got test, and then we've got break. We've got that daily close above that level. That was the tell. As soon as you got that close above that level, it's telling you that higher prices are ahead. We have the fundamental reasons, we have the technical reason. Look now at the weekly chart. You can see on the weekly chart, you can see here, look at that. Look at that zone, that key overhead resistance zone. It's from here to here. There's a key level there. And you can see the price has broken above that key level. Now, that is the key. You're looking for a break and a close. And then what we're looking for in the monthly chart, we haven't got, see here, break and close above there, resistance becomes support. So if this situation carries on, we've got low global interest rates, we've got uncertainty over trade disputes, we've got lower bond yields, then gold is set to move. Now we can see 2002, 2011, there's huge gold bull market. Okay, so the question here is this the potential to a start of a new gold bull market? Well, a break and close on the monthly chart technically would say yes. The fundamentals remain the same, would say yes. So then you would look to buy from support. So this region now becomes technically very important. So anything 1377, 1350, so anything between 1380 and 1350 is a buying opportunity on gold if the situation stays as it currently is. Looking on the monthly chart, we want to see a break and a close above. We've got it on the daily, we've got it on the weekly. So this level becomes important. So Sammy, what's happening with gold? Is gold reversing? Markets don't move in a straight line forever. You can see, look, markets move in waves. You can see, you know, it's up, down, up, down, up, down. So don't, you know, I traded this on the Federal Reserve night and I took profit very quickly as my profit targets were hit very fast. And, you know, I took 3 positions on gold and I'm out of all of them. And I'm now looking personally to re-enter. Okay, and I'm looking to re-enter as price comes down 1383, 1370, that kind of region, as I'm looking to enter with stops below the lows here, 1330. Okay, that's a fairly well anchored place for stops, and you can look at a fib retracement level. So the kind of things you want to look for here is look for that top to be in place once gold does start reversing. and then just look for a Fibonacci retracement level. So you can see you got here, and then a Fibonacci retracement level, the 38.2 level and the 50 level. They're both two key levels which you could enter in on that chart. But that's a little tip. Look for a break and a close. You'll see it's very helpful. Obviously, it doesn't always work. Sometimes you get a break and a close, and then the next day it reverses through. So that is not a guaranteed technical clue. But when you've got the technicals and the fundamentals all coming together like this, what we want to see, we want to continue to see a reason for the Fed to be dovish. So what's going to reverse this is if there's data that comes out that suggests the Federal Reserve doesn't need to be as dovish as it indicated. You see, that's what's going to change it. If that doesn't change, you're going to see things carrying on. So the market's been viewing US data coming out this week very carefully. We've got the inflation data, which is the big one on Friday. That will be very closely viewed, and all the other minor data points will be, will be viewed through that lens. So, guys, I hope that has been helpful for you. Don't forget, before we go, the offer HYCM do. It's a very good offer. With deposits of these different amounts, you get different levels of personal coaching with me. So if that's something you're interested in, don't forget this. Take a quick screenshot if you're interested. And people find that very helpful, and it is a good service because actually it doesn't cost you anything, because that deposit money is your money. So once you put your money into the account, you get this benefit of having coaching with myself. So that's just a decent offer that HYCM are doing. Guys, I hope that's been helpful. Done it slightly differently today. I hope you've benefited from that. And don't forget, go through the week and do the same process. Find the strong currency, find the weak currency, draw your Fibonacci retracement level from yesterday's highs to today's lows, or vice versa. Find Fib retracement points, 382, 50, 618 level. Look at pivot points, look at moving averages, find areas where you get multiple things, and that would be helpful. Yeah, I'm glad that's been good. Oh, good, Aaron. I'm really glad that's helpful. John, thank you. I'm really glad that's helpful. I get a lot of pleasure from helping other traders, and it's been a pleasure, guys. And well, maybe we'll do this. Maybe we'll do the same again next week and just go through some of the nitty gritty to help you. Yeah, cheers, Nadir. Thanks a lot, guys. Take care and hope to be in touch. Don't forget the FX week ahead. I won't be here. Important. I'm not here for 2 weeks. I'm going away on holiday to the land of Wales, which I'm looking forward to. But I'll be back on July the 15th. So normal service will resume July the 15th. Until then, take care, guys, and trade well. Yeah, thank you very much, Islam. Take care now, guys. Goodbye.